Execution, the next topic as well. If you've noticed, I've made this one an eagle flying above, this one an eagle executing. Because the reason why I did an eagle, it's because I actually got the question today as well in the Discord. I don't know if you saw. Should I use a higher time frame analysis? Should I do it? If you think about it, and let's take, that's why I chose the eagles. Let's take an example. A rabbit or any animal you want is in the grass, has no idea what's happening above him. No idea, but he's searching for his prey. He's just searching for what he can eat, but he can't see from above. He's just blind to see where all the food is. Then we have an eagle. An eagle is us. We are the eagles. The bunnies or the rabbits, those are the Twitter traders that only trade on the 1M. And we are the eagles flying above, seeing them from above, what's happening, where the liquidity is, where our high time frame PD arrays are, just flying above those rabbits. And once we see the opportunity, we strike, and we know exactly what's happening on every time frame. We have an eagle eye view from above. We know exactly what's happening. We know exactly what price likely to do. And this is why it's so important to have a higher time frame analysis. So important. Even if you're not going to use it, it's better to be aware what's happening on the higher time frame than to be totally numb to it, totally not seeing what's happening. So this is very important. This is what I preach, and for me, it's very important. Without a high time frame, I always struggled. I always had losing trades, and I didn't know what's happening. And if I zoomed out, it's just an obvious 1 hour PD rate that I just was completely ignoring because I was focused on the 5M and I was addicted to those lower time frame moves, and it didn't make me profitable. Of course, I'm not saying it's not profitable because I know some people will be profitable on the lower time frame. It's just a general rule of thumb. There might be exceptions where people are very good on the lower time frame. But then again, what's your goal if you want to make big money? The big money is not on the lower time frame. Only proceed if you finish the higher time frame analysis steps plus videos and you fully grasp higher time frame analysis. Of course, there will be times where you will say and doubt yourself, like, do I fully grasp higher time frame analysis? I'm not sure. Do I go on to execution? I'm not sure. Just if you doubt it, just go to execution, and you'll soon find out if you should have stayed at the high time frame analyst phase or execution phase. You'll find out. So don't worry about that. Steps. Determine the type of trader you want to be. So do you want to be a scalper, a swing trader, a day trader, a position trader, one shot, one kill, etc. Whatever you want. And this is very important because this leads us to the next. Use time frames efficiently. If you're going to be a scalper, yes, you will probably, and I always advise, yes, do a high time frame analysis. Even if you're a scalper, then you're not going to execute on a 5-minute entry or 4-hour entry with a scalper. So that's why you have to choose your time frames very efficiently. And for example, my time frames. What are my time frames? 4-hour PDA, 5-minute entry. So I have a time frame for my PD arrays, and that's the time frame I monitor. If we are not in a 4-hour PD array or not even close, I don't monitor price on the 5-minute, because then I'll know it will start creeping at me. I'll start seeing opportunities that are not there, and then I'm just the rabbit that's bound to get eaten by a big eagle. So very important again, use rule of 60 as a general rule of thumb, then change it to a number nearby using logic and seeing what you like best. Now, this is something I learned in the beginning of my trading journey, which is actually pretty fun. So let's say 4-hour, let's say it like this. We want to execute on the 5M. Or yeah, is that, yeah, okay, we want to execute on the 5M. We know we want to execute on something in the minutes, either 1 minute, either 30 minutes time frame, whatever it is. Then if we think, okay, then we have an hourly PDA. Let's say 4 hour. 4 hour, how many minutes is 4 hours? 4 hours, let me grab a calculator real quick. 4 hours, that is 4 hours, that is 240 minutes. So 4 hours is 240 minutes. Then divide that by 60. So 240 divided by 60 is 4. So I don't want to use a 4 minute time frame for my entries because that's very specific. I just don't like it. If you have a set standard of the normal standard is 1 minute, 5 minute, 3 minute, 15 minute, 30 minute, like it's very specific to use a 4. So I just like to go to the nearby number, and by using logic and seeing what you like best, okay, 5 minute entry. Then I use an exercise, which we'll get into later, to determine if I like this entry time frame. Then let's do another example just for example's sake. 1 day. We're using a 1 day PDA. 1 day, likely also in the minutes. Okay, how many minutes is in a day? 24 times 60. 1440 minutes. 1440 minutes divided by 60 is 24. Divided by 60 is 24 minutes. So you could use possibly the 30-minute time frame. Now I like to see, and this is where preference come in, personal preference. I like to have a bit of a more overview, but not too much like the 1M, but a little bit more. I like to see a little bit more. So I round it down to the 15-minute. I'm not going to use the 20-minute. I'm not going to use the 19-minute. It's very specific. I don't like those numbers. I'm going to use the 15-minute. So that's it for the rule of 60. You can apply this even to the weekly. Then for the weekly, you would say, this is not 14,000, but 1440. For the weekly, you would say, okay, let's calculate it to the hours. So how many hours are in 1 week? And for the monthly, again, same. You calculate the hours, how many hours are in a month, etc., etc. This gives you a great indication, and this to using the time frame, the entry time frame for your PDA. So if it's one last, I'll do one last. If you're using a 1 hour, because I know some people are eager to use the 1 hour PDAs. So if you're using a 1 hour, that's 60 minutes. 60 minutes divided by 60, obviously, is 60 minutes divided by 60 is 1M. Now, if you want stronger entries, you could round it up to 3 minutes, etc. But 1M will give you a better view on price. So then determine the session you want to trade. This all depends on your personal preference. I don't have a exact view of your time schedule, etc. I'm just not sure. It's very personal for you to decide this, as well as determine the type of trader you want to be. It's very personal. Do you like the 1M? Does the 1M give you stress? Does the 15-minute give you better entries? For me, I notice the 1M tends to give me stress. My best entries are on the 15-minute time frame and above. So that's why I switched to the 15-minute. That's just very personal for me. I know myself, I know what I like, etc. It's also a little bit trial and error, so don't worry if you get it wrong the first time. And this is not the problem. You can start as a scalper, etc. And you can slowly, because if you have a fractal plan like mine, then you can very easy implement it on a higher time frame. Like for me, 1 hour PDA, 1M confirmation will be the exact same. I just switch time frames. My plan doesn't change, only my time frames change. So that's very important to notice as well. Determine session, very personal. Determine your pair. Master 1 execution pair. So ideally, you want to master 1 pair. Now, of course, there are some exceptions, I would say. If your pair moves very correlated to another, then it's okay to switch. Like GU, EU, you can switch and notice a stronger pair or notice the better setup. That's something that I would allow. But that's, of course, if you do like it and you can switch pretty easily, then go for it. If you're someone who doesn't like to switch or doesn't like changes in real life, then stick to 1 pair. Again, something personal, master 1 pair. Why 1 pair? It's very important to master 1 pair because every pair has its own characteristics. For example, I know odd USD. I used to trade odd USD. It moves very in a weird way, just constantly coming back to order block, making new order block, coming back to order block, and it's just something you notice, and you start to notice it. Your subconscious starts to notice it, and that's when you excel at your understanding. And that's very important, as well as some strategies might not work on Forex and they might work better on indices. So that's also something to take into account. Determine your risk management. What exactly do I mean by risk management? Your risk percentage, your stop loss, where do you place your stop loss, your target, your break even / partial. Will you go for partials? Will you just do, will you fully close something at 3R, etc.? Will you go break even? I go break even following order flow. Where do you place your stop loss? Will you trade it even in drawdown, etc., etc., etc.? You can take my risk management as example. I risk mostly. I risk according to the conditions, to the current conditions. So this week, if I wasn't sure about the drawn liquidity, I would risk less than when I'm very sure on drawn liquidity. Of course, this will take experience. So just in the beginning, I would have a set risk percentage. Then for my stop loss, I cover the next premium or discount array. So I'm not covering, let's say the market structure shift is very big. I'm not covering everything. If there's a breaker, I'm covering the breaker and not the swing low, for example. Target, I target the low hanging fruit. Break even, I go break even, like I said, after order flow has no reason to come back. I don't partial, I take everything off at the low hanging fruit. Use economic calendar as your roadmap. Very interesting as well. So on days where we have, for example, employment claims, or what is it called? Yeah, employment claims, right? So on days like these, you know where the volatility is coming in. For example, we have GBP, red folder news in London. We know, okay, that's where the volatility is coming in. I want to either get involved, like ICT says, like I saw on the Discord as well, to get into the low resistant liquidity run, and news will take me there. Or the only exceptions for me personally, of course, this will depend on your strategy, etc. You will learn this with experience. But the exceptions for me where I don't get involved probably even the day before is CPI, FOMC, and NFP. Those are the days where price can chop you up ahead of the news event. So that's very important to know as well. And then after the news events get released for CPI, FOMC, or NFP, that's when I start looking for my trades, because price will likely be held inside a consolidation. Institutions will wait until the news releases, etc., and then get involved. I'll touch on this as well. Don't worry, everything here will go through step by step in the market reviews, which I'm doing on my pair, etc. So don't worry about it. And again, use economic calendars, your roadmap. This will already tell you on which days you are likely going to trade. If there's NFP on Friday, then I'm for sure not going to trade on Friday. So I might not even trade on Thursday. The Wednesday in London, I like to trade ahead of NFP. And if there's on Tuesday in New York or London, there's a red folder news, for example, then I like to trade there because I know there's going to be volatility. I know there's going to be movement for my trade to go to take profit. Write down your entry model. How do you want to get in sync with your established higher time frame analysis? Now, trade into the direction of your established higher time frame draw on liquidity. So if the 4-hour candle you expect it to be bullish, trade into that direction. Of course, we're not going to only trade into the monthly direction. That would be, of course, for the higher, if you're trading off the 4-hour, it would make a little bit sense. But if you're only trading off of the, if we're currently only trading off of the daily or the 4-hour, it's best to trade into the direction of the daily and 4-hour. That's what you expect. And the daily and 4-hour will, of course, be in context of the weekly and the monthly. So it will all line up. It will all make sense in the end. Wait for a PDA to get hit. Again, for me, 4-hour PDA or daily PDA, and that tells me which time frame I should confirm it on. Use one of the two patterns to get in sync with the market. There's only two patterns to get in sync with the market. Either you will be trading offset. Now I have offset and re. This is offset accumulation or offset distribution if you're bearish. Either, again, this is all the same stuff. Oh, this right here is all the same stuff. So either offset accumulation, turtle soup, same stuff, external range liquidity entry, same stuff. Then the next pattern you have is a reaccumulation, a fair value, OTE, internal range liquidity, or aka a retracement entry. So you're either entering off of external range liquidity, which is 2022 mentorship entry model, or you're waiting for price to get into alignment, which I like this one the best because it gives me the most certainty. Order flow is already in my favor, etc., etc. Then I like to wait for a fair value entry, a simple, very simple 5-minute retracement entry, very simple. So these are the only two patterns you'll have, and you decide which one you'll take. Of course, if you wait for a 4-hour PDA, your 4-hour PDA could be the low. So on the 4-hour, it would be an offset accumulation entry. And on the 5-minute, it might be a reaccumulation entry, a simple retracement entry. This is something you have to start looking for yourself. What do you prefer? And again, we'll go over an exercise, a very good exercise that I recommend everyone. So please do that one as well. And that will tell you, because you will start noticing certain patterns. Once during the exercise, you will start noticing certain patterns. The pattern that you notice, that's the one you're likely going to trade, because that's the one, it pops out to your eye. You're going to see that pattern so easily. So that's the pattern you want to be capitalizing on. For example, me, the fair value entries, they jump out to my eye. I spot them so easily. And turtle soup entries, I spot them less easily. So I want to trade fair value entries, etc. Low probability conditions. Knowing your low probability conditions is what makes a professional trader. This is the thing that makes a professional trader. Low probability conditions, very, very important. Now, of course, getting to a low probability conditions and establishing low probability conditions, it's not going to happen overnight. I'm not going to give you a list. This is low probability condition for you. This is low probability condition for you. This is low probability condition for you. No, we all have different entry models. Our trading plans are different. We are wired differently. What I'm going to see, you might not see. What you might see, I'm not going to see. So low probability conditions will be probably different for everyone. Some generic, some general low probability conditions could be the same, but then again, if you're a search and a seek and destroy trader, just sweep liquidity and then enter, etc., etc., then you're likely excel in rangy conditions. So that's something that will be different. But general rule of thumb, low probability conditions is ahead of CPI, FOMC, and NFP. NFP, you can trade the Wednesday, the London session of Wednesday ahead of NFP. That's the one you can trade. On Thursday, it would be less recommended. But again, if your model works well during NFP or ahead of NFP, then go ahead, then trade NFP, do what you want. This is not going to be a one fits all type thing. It's going to be a personality thing again, and personality to your trading plan. So that's very important, as well as if FOMC is a big, so I'm just going to name, as well as my own low probability conditions are in here. So you can check them out if you want. They are right here in the trading dashboard, journal, and then right here. So you can check those out if you want. For me, FOMC, if FOMC is a big whipsaw, again, because we're moving from expansion to consolidation, if there's a big expansion overnight or something, then London might not be ideal. So after FOMC, London might not be ideal. That's for me one. Then the next thing, once you know all this, it's very, very important. Keep the core the same. The core of your trading plan should always stay the same. Of course, there will be times where you might have a better thing to use. Of course, if it's reasonable, and then it's truly, you need to first finish the psychology lessons, which we'll get into next week, to know if it's reasonable. It needs to come from an objective observation. If not, then don't change anything. At first, I would say don't change anything. Don't even bother. Keep the core the same. So for me, the core is my high time frame analysis, that routine of how I get to my high time frame analysis. And then my entry model is also the core. So the order flow. I'm very good at reading order flow. So for me, the high time frame analysis routine and my entry model, the order flow, is my core. I'm not changing anything. I'm not going to use new week opening gaps. I'm not going to use Fibonacci things. I'm not changing anything. I'm keeping it simple and not changing anything. And the only thing that I will study is the core. So my high time frame analysis, I will study. Of how my routine, I will study. My order flow, which I'm very good at, I will see, okay, how can I get better in my order flow? How will price likely react to order flow, etc., etc.? When will order flow shift, etc.? I have numerous of ideas, but the core is the same. I'm not going to study new week opening gaps. I don't care. It's not part of my plan. I'm not going to study it. Of course, this is not to say that you're not open to new ideas at all. This is where there's a very thin line between being open to new ideas all the time, where you don't see any profitability, and being stubborn and sticking to your thing, because it's a healthy mix of both. You have to be open-minded, okay, but I'm not going to implement it right away. I'm going to study and see, but again, I want to keep the core the same, and I don't want to make things too complicated. And this is the same as don't change any rules. I know. I've been there as well. When I took a loss, I would make a new rule. Okay, how can I prevent this loss? And I would have 1,000 rules of how I prevented every loss in the world, and would present no new trades because I had every rule. And eventually I would break the rules because there's too many rules, and it's just an endless shitty cycle that you're not going to get out of. So this is something to take into account as well. Don't change anything after a loss. A loss is inevitable. If your plan is proven to be profitable, which you'll get through data, etc., then it's very unlikely that your plan is stop working after a week or a month. Maybe after 5 years we can start seeing, okay, some things might have changed, but still generally it's the same. So Markets don't change that fast. And then, of course, in low probability conditions, then you might have more losses. See how it goes hand in hand? Okay, so end of day markups, which opportunities were present? This is very important to train your eyes. If you're, especially if you're not trading every session, I use this. Again, my journal, just copy everything you want. The PM session, AM session, everything. For Forex, you could change it to New York, London close, whatever you want to do. Then before and after, and during or after every session, I have a different layout in TradingView, and I go in and see, okay, which trades did I miss? Which one were present, or maybe in different sessions? And after every week, I study them. I see, okay, how could I get involved according to my plan? Okay, and what's the data on it? Where most entries during London, during New York, during PM session, London close, etc. Which days, etc. did they happen? It will all be in here again, as well. The weekly review, it's all in here. Do this, and I promise you, if you just stick to these simple steps, there's nothing holding you back. There's only time holding you back. Only time that's not in your favor right now. If you just stick to these simple steps, 1, 2, journal, just do this every day, consistency, there's insane amounts of money to grab, not financial advice. Deep work sessions, again, same as high time frame analyst. It comes back to the exercise. So deep work session, go for 1 hour a day or whenever you have the time. Of course, if you do have the time, then make sure you do take advantage of these deep work sessions, because deep work sessions is where you form your own edge. This is where the magic happens. You are going to start seeing things that you didn't see before. This deep work session is how I noticed fake bottoms, fake tops. It's how I noticed order flow, etc., etc. It's how I noticed how I got to my plan. It's how I formed my understanding. Deep work sessions is where the sauce is. And that's how you get your personality out, because something will jump out to you, and fake bottoms might not jump out to you. So it's not relevant to you. And that's very important. Deep work session is very, very important. For a deep work session, for example, execution exercise, open a chart. Could be any chart, preferably, like we discussed, the chart you are going to trade, the pair you are going to trade. Let's say, for example, EU. We're going to trade EU. Pick out, in hindsight, a clear high time frame objective for price moved from one PD array to another PD array. So we are going to act like our high time frame analysis was correct. It was already perfect. Our drawn liquidity was, we knew this was going to happen, etc. So we're just going to go into hindsight and act like we knew the high time frame analysis and we knew that move was going to happen. Then, in hindsight, go into your execution time frame and see how price reacted off of the PDA. So again, if we have a daily order block and we are expecting, or of course, in hindsight, we can see it moved away from the higher time frame order block. Then on the daily higher time frame order block, we're going to go into our execution time frame that we established. So that might be 15 minutes for me, for example, or whatever time frame you're going to be using. And then we're going to note how price moves away from that daily order block. Note order flow, time, news events, structure, momentum. Everything. How fast is price moving? At what time did price move away? At what time did it sweep liquidity? At what time did the move start? At which day did the move start? In which session did the move start? Which intraday market session profile template, whatever it is, happened in that week? Which weekly market maker template happened? Everything you can think of, every single thing in hindsight first. So first in hindsight, and see how you could get involved. How could I have taken this move? What move would be reasonable for me to take? Of course, in hindsight, it's very easy to take the liquidity sweep and it will go higher. Of course. No, not like that. Of course, be reasonable, be logical. How could I have gotten involved? Very important exercise. If you do this just once or twice a week on your Saturday evening or your Sunday evening, sacrifice those friends that are going to the club and drink them, just drug themselves, etc., and are worth nothing in the next day. Sacrifice that. Deep work session in the evening. Next day you're going to wake up like you feel like ICT. I know everything. I know how the market works. I know everything. It's something special. Believe me. Go do it. Go into it, and you're going to start noticing patterns that you didn't see before. Use the replay tool on the entry time frame once we come into the PDA. Optional. Again, if you don't have access to the replay tool, that's totally fine. You don't need it. If you do have access to it, please make use of it once in a while. First, do the hindsight technique, and then use the replay tool on the same piece of price action and see, okay, where could I have gotten involved? And pick a new price action part. Okay, how could I have gotten involved? The high time frame analysis is accurate. I know it's going to be accurate. How can I get involved? Very important to form your own model. While using the replay tool, practice how you would get involved, like I just said. Note any discovery and make markups on the trades and subjects. Repeat. Now, this is something interesting. I want to show you something. I want to show you something. Let me grab it real quick for you. Let me close this. So this is what deep work sessions look like. This is my archive. I've never shared this with anyone else, so please feel special. Always ask yourself why something happens. Knowing the logic behind it is super strong. If you're just trading patterns, you're just a non-retail trader. So form your own logic, etc. Like our philosophy pretty much speak for itself. Study everything from a liquidity standpoint, a transactional standpoint, because that's my theory. So everything is going to be based on my theory right here. These are all the studies I have completed. Every single study I have completed of things I was interested in, and I have completed discoveries, even more stuff. Even more. And then even homework from 2022 mentorship, from core content, all deep work sessions. Everything, my own trading model, delirium, low probability, high probability, market tops and bottoms. You know, this is how I got to fake tops and bottoms as well. This is the notion that I talked about. Every day that I noticed it. Every day that I noticed it. Notice how far back it goes. Every day. And then this is not even part of my end of day markups. Not even part of my end of day markups. My end of day markups where I place all my trades, etc., where I look at all the trades I placed. That's even more. This is solely off of the studying my core of my trading plan. So order flow, etc. Everything I want to use. This is all deep study, deep work sessions. Now, once you've done something like this, I think you can get an understanding of how to become profitable and why it's so important. Because these deep, would you ever share any of the notions or personally? I would definitely share notions with you guys, not with anyone else, but with you guys as well. But again, this is why it's important and why I talk about personality a lot, because in deep work sessions, I'm not going to notice what you notice. So if I explain my reasoning behind things, okay, it might make some sense, but it's because I noticed it in my own deep work session. And I might not notice what you notice in your deep work session. So this is very important. The deep work session is literally, that's the sauce. That's how you're going to get to your own understanding. That's how ICT got to his own understanding. Every profitable great trader got to his own understanding. ICT got to his understanding by failing and by doing sessions. He went into price, like, how does this move? How does this move? Going to study this. So there's deep work sessions every day. That's how he got to his own understanding. And it's very important. And that's why his thing works so good for him. But it might not work for everyone. So again, deep work sessions, that's the sauce. And notice as well, I don't have the steps very much text, because I want you to watch the videos. That's why the videos are very important. They will go hand in hand with the notions. Again, note any discovery and make markups on the traits and subjects. Repeat. Open the chart, go study a new thing, just like I did here. I went to time, delirium, low probability, high probability, market, inversion, FEG, weekly profile, simple strat, spotting consolidation, types of traps, shallow retracement, everything. Okay, then next thing, yeah, this one, journal every day. So every day, end of day markups, pre-market analysis, etc. Everything, the whole package. London before, London during, London open, daily analysis, before, after, what happened, during what time, during this, what happened, everything. you gotta know everything. No, you don't have to know everything, but just do the markups. They don't take a lot of time. This explaining takes more time than it does to do end of day markups. You just have to do it consistent. That's very important. Consistency. Just you don't have to. It's better to study for 1 hour every day than to study 7 hours one day of the week and then do nothing for the rest of the week. It's very important. The consistency will get you to profitability. Very, very important. Following these steps consistently, only thing holding you back is time. The only thing holding you back is that it's not 2025 right now. If it was 2025 and we could skip with the same consistency, oh boy, you would have a lot of, maybe a lot of money. Again, not financial advice. Finish the steps. Only move on once you finish the execution steps plus videos and you fully grasp execution. Only move on once you have fully written down everything and you think, okay, I'm ready to move on. And again, the next topic number 3, is psychology. During high time frame analysis, during execution, you will encounter psychology problems. 100% guaranteed. 100%. Most technical problems you're going to be having, they're not technical problems. You think they are technical problems. No. They're psychology problems. Most of them are deeply rooted in your psychology. If you think you should change something in your technicals, most likely it's not a technical problem. It's you being greedy because you missed an opportunity this day. You want more money. You feel the need to trade. It's a psychology problem, not a technical problem. Most of your problems are inside your head and they are not technical problems. Believe me on that. So on that note, the fourth one is, by the way, it's something I created last night because I feel like I want to make it better structured. And soon, very soon, I hope as soon as possible, there's a website integration coming where you guys can, and guys and women, sorry, where you can all see the videos on a website and see your own process, see the PDF files. I will share this as a PDF file for your own, see your own progress. So everything will be removed from the Google Drive. I think that will be better. It will be better for your structure. And again, follow the structure. Don't sit there and just do your own thing. You're here for a reason, right? And this is for you. This is not for me. Of course, I love to help. This is why I'm doing this, and this is why you could probably hear I'm so passionate about it because I love to help. And I think this is the stuff I needed. I needed someone to tell me to just shut up. You don't need another rule in your plan. It's just your psychology. You need this. You need to hear it. And I think that's what I needed as well. And this is why I want to help. I want to help so bad. So again, yeah, follow these steps. Execution. I'll give you homework tomorrow. I'll upload the PDFs And I think that was it. Let me check my Notion if I got everything right. Yeah, that was it. So again, do enjoy your weekend, refresh your brain, think about other things than trading for a while. Go to sleep, go out with your friends, whatever you want to do. Just make sure you're ready for next week. I'll send you homework tomorrow, etc. The Notion links will be helpful. Then just yes, but I'll still share them as PDFs probably, and you can just, if you want, you can use them. You can copy the steps. No, we are not going to Q&A. And again, I will structure the Q&A analysis or Q&A a little bit different, because I think it's very chaotic if there are different questions than other than the subject right now. So, and if you do want questions, of course, always, you can always DM me, etc. Just on the Zoom. I think for people that are rewatching the Zoom, it's very chaotic if we're talking about execution and the next thing you know, we're talking about market makers. It's just very chaotic. So again, that's something I have in store as well. I want to thank you all. Please, if you do have questions, you can always hit me up on Discord. We can call, we can do whatever you want. So yeah, I want to thank you all. Have a nice evening, have a nice day wherever you are, whatever your time zone is, and enjoy your weekend. You will be teaching entry models. You can see my entry models. They are already out there on Google Drive, etc. And yes, for this week, last thing for this week, I will be going over every day and how we should get involved or how we could get involved. All these steps I will go over every single day. So every evening, for me evening, you'll see a market review while I'll go over high time frame analysis and while I'll go over how could we get involved. So that's it. Have a nice weekend again. Have a nice one. You can watch this back. Thank you, everyone. I hope this was a great Zoom, and I'll check you later. Bye-bye.